Welcome back. It's time to answer your portfolio queries, and I'm joined by Harshvardhan Roongta, CFP Roongta Securities. Harsh, good evening, and welcome to the show. And let's begin with our viewer queries. Let's take Satyam Singh's question first. He says that he's 36 years old and he is investing in Parag Parikh Flexi Cap, 5,000 rupees, Motilal Oswal Mid Cap, HDFC Small Cap. The investment duration is almost 15 years, and he wants to accumulate 1 CR with this portfolio.
So, well, Kavita, with the portfolio that I see before me, he's got a very good portfolio with one allocation in a quasi-large cap, one mid cap, one small cap, and the allocation one-third into each. So I think these schemes, the allocations look fine. I don't see any reason why there should be any changes to be made in his portfolio right now. I'm only a bit concerned about his targets. So he says that in 15 years, he wants to accumulate 1 crore. But in case we were to extrapolate this calculation, that this investment that he's doing, assume a 12% return, which is as per AMFI guidelines, he can expect approximately 75 lakhs after 15 years. So in case he wants 1 crore, then he'll have to increase his SIP by another 5,000 rupees. So as and when possible, please make sure that you do increase your SIP so that you can achieve your targets completely.
All right, so all three schemes are good, and you are advised to stay put in this and maybe increase your investment amount. Amit's question, UTI Nifty 50, Nippon Large Cap, ICICI Large, Parag Parikh Flexi Cap, HDFC Flexi Cap, Nippon Multi Cap, ICICI Large and Mid Cap, Bandhan Large and Mid Cap. He's got a couple of funds in his portfolio. Okay, and so he really has realized how can he reconfigure or consolidate his portfolio with so many funds. Okay, so that's a good realization. I don't have him on the phone line, but then yeah, he also wants to know where he should be putting his money for lump sum investment. 1.7 CR is the current value, and he plans to continue SIPs for another 3 years and thereafter start SWP at 4% for 20 years. And how much will remain after 23 years is what is his question. Yeah.
So, Kavita, I mean, your expression said it all when you were reading out his scheme names. Yeah, of course, he has 14 schemes in his portfolio. So, Amit, on a very serious note, I understand that you also now have realized that you don't need so many schemes in a portfolio. Even with a fund value of 1.7 crores and 60,000 being invested every month, you could very well do with just 5 or 6 schemes. Each scheme that you invest into invariably invest into 30 to 40 companies in any case. So investing in 14 schemes and each scheme having 30 companies or 40 companies serves the same purpose almost when you have just 5 or 6 schemes. So yes, there is a need to consolidate your portfolio. Let me warn you, there would be a capital gains implication. So in case you're going to consolidate your portfolio wherein you're going to keep only 6 schemes, you're going to redeem out of the others, there's going to be a capital gains implication. However, at some point in time, you have to pay capital gains. You pay it today, and when you reinvest it, your cost of acquisition again restarts from today's day. Or you don't pay today, and after 10 years or whatever number of years, you remove the money, there is going to be a capital gains implication. Since you've undertaken the exercise of consolidation, do not let yourself not do this only because of capital gains tax. So that was one suggestion that I wanted to give you. With regards to your portfolio, I am retaining some schemes out of your existing portfolio itself. So you just have to do the amount rejig. You don't have to add any more new schemes. UTI Nifty 50, Parag Parikh Flexi Cap, Nippon Multi Cap, Invesco Mid Cap, Bandhan Small Cap, and ICICI Multi Asset Allocation Fund. So these are the 6 schemes that you will continue with in your portfolio. Redeem out of the other schemes, reinvest it back as lump sum into these 6 schemes itself. So whatever is the capital gains tax implication that you will have to bear, and thereafter you're coming back into these schemes to continue for the future.
All right. Mr. Chandran, he's a senior citizen and he's been investing in SBI Mutual Fund, SBI's Contra Fund, SBI Mid Cap, HDFC Mid Cap for the past 1.5 years, and he's planning to continue this for 3 to 5 years, and he wished to know whether the decision is right or not. So he's a senior citizen, and 3 to 5 years, I don't know since how long he's been investing and what's the ideal or ultimate goal from this particular portfolio. So we don't have those details, but having said that, funds are good, but maybe too risky since we don't have all the details, and he mentioned he's a senior citizen. Harsh.
Yes, Kavita, so 2 points to note. One, of course, he's a senior citizen, and the other one is that he has a time horizon of 3 to 5 years. So, in both these scenarios, there has to be a very close look given to the fact whether you want equity in your portfolio or not. Now, I assume that he is okay with having equity in his portfolio, so he can continue with that. However, keep a hard step, I mean, a hard stop saying that after 2 years, he's going to have a very clear look, very focused look on whether he wants to continue with equities or not, because thereafter he'll have only probably 2 years or 3 years for the before he needs that money. So, Mr. Chandran, just to sum it up in simple terms, one is you need to first decide very carefully, do you want to be in equities or not at this stage in time? In case you want to continue, I would suggest that reduce one scheme out of the mid cap category and introduce a large cap, probably an index fund. At least to that extent, you will have some kind of a focus in large cap, mid, and small, rather than two mid caps and one small cap. So the suggestion would be stop the SBI mid cap fund and invest that amount into the SBI BSE Sensex Index Fund. You just have to do a switch. The same folio remains as it is. Just do the switch from a mid cap fund to an index based large cap fund. And as suggested, just ensure that 1 or 2 years down the line, you do a review and ascertain whether you want to be in equities or not, because your goals are thereafter going to be just 2 or 3 years away.
All right, so these are the changes recommended. But then with that, it's time upon the show as well. Thank you so much, Harsh, for taking time out and helping our viewers with their portfolio queries. And for our viewers, I'm going to leave you with our WhatsApp number and email ID where you can send across your questions. Thank you so much for watching. Goodbye.